David Daoud of Compliance Standards. Today is Monday, the 21st of October, 2024, and thank you for listening to this presentation. This presentation is largely the result of extensive discussions, interviews, and research with 30 senior executives, mostly CEOs, from the IT Asset Disposition sector and the electronic recycling industry more specifically. So we had the pleasure of getting the ITAD and electronic industries feedback 4 times last year through surveys, and feedback then collectively was one that reported a rather difficult period. I can sum up 2023 by what one particular CEO told me, that, I'm quoting here, "We met our revenue target, but we missed our profit target." But he added that still, that was not a bad place to be. Before I summarize for you what I am seeing taking place this year, let me just begin by giving you sort of a bit of a reminder of what 2023 was. Now, in this table that you see here looks at your industry's sentiment during most of 2023, and you can see business conditions essentially improving slightly as we closed the year 2023, but the details obviously suggest mixed views. When we probed the sector about these results, industry executives noted that in 2022, that is the prior year, a period I would call post-COVID era, the secondary markets were not as active as they hoped. This was a period where products struggled to find buyers in the secondary market, resulting in the fall of prices to the bottom. Some stakeholders even reported seeing prices in 2022 drop by more than 50%. But in 2023, there have been some growing signs of stabilization, even if the year essentially ended in a less stellar situation. This may have been a harbinger of what 2024 would look like eventually. So last year, the ITAD sector continued to face supply limitations. Some even reported a worsening versus 2022. We actually saw vendors instead focus on internal process optimizations, resulting in productivity gains rather than market improvements per se. With productivity gains, the majority of companies that we surveyed last year made no big changes in their staffing position. That is in 2023. About actually 1/3 of them did some hiring, some 10% actually resorted to layoffs. The revenue picture in 2023 was more nuanced, showing some positive momentum, but not enough to offset a weak pricing environment or generate the types of profits that companies would want. On the client side, what we saw is longer decision cycles, some even abandoning RFPs amid a more difficult customer acquisition model. We are aware that the sales cycle took, and still takes, by the way, between 12 and 24 months to close a deal, and that puts a lot of pressure on ITADs and their sales organization. Now, consumption for data center hardware was also down for some key vendors, resulting in revenue and margin pressure. Here is another chart to reflect 2023, essentially depicting a secondary market prices that were highly depressed for most of the year. You see 67%, 95% in 1Q of the respondents noting a decrease in prices year over year, with as many as 40% reporting severe decreases actually. We're reflecting a cautious approach to spending. 75% of those reporting CapEx, or capital investment or expenditures, spent less than $500,000 in 2023. Now, when we asked the industry as to what they expect for the next period, that is essentially the next 12 months or 2024, the outlook was actually pretty positive. Actually, 67% said that business conditions will improve. Now, the same percentage, more or less, of vendors anticipated increases in revenues, and more than 40% anticipated committing more capital investments versus 26 to 37% making such investments in 2023. So there was a pretty good momentum going forward. M&A outlook, however, looked more uncertain as ITAD companies adopted a wait-and-see stance essentially to see how inflation would evolve, to see how interest rates would evolve, etc. Now that we have the baseline for 2023, how is this year evolving? Well, first, a disclaimer that not all ITAD companies are the same. As you know, the industry has a variety of players with objectives and agendas that do not often converge, many of whom are pure play ITADs. Hundreds of them are practically irrelevant in the way things are trending going forward. They remind me somewhat of what we used to call the white box makers. These are companies that produced computers without a brand. And when I used to be in the PC space, we used to count them as a market with declining market share, essentially nowadays probably very low single digit. In the ITAD space, there are many players that have different core businesses, and where ITAD is generally a small division or a subsidiary relative to the core business, if you will. As you know, parent companies range from OEMs and technology distributors to commodity traders and conglomerates to document shredding and document destruction firms, etc. ITAD has always attracted so many players from different industries. Many of them explored the sector and ended up giving up because they couldn't position that industry within their business. For example, I've done consulting work for the likes of companies that are in the transportation business, companies that are in manufacturing, companies that are in earth-moving equipment, for example, with each of these companies having one reason or another to invest in ITAD. In today's environment, each company has an ITAD strategy that should fit into their core business strategy, and quite often, the way companies think of ITAD is different from company to another. For some, ITAD is an enabler and a catalyst for expanding core business. For others, it's about, for example, buying scrap and a lot less about value-added services, etc. So in this environment, it's normal that the sector is evolving in a heterogeneous way. But clearly, there is a consensus among the 30 executives that we've spoken with that 2024 is a much better year than 2023. And more interestingly, perhaps more importantly, 2025 is on track to even be better. First, let me share some feedback on the big picture specific to demand and what's really driving it. Number one, data center decommissioning has been a dominant growth driver in 2024 as enterprises refresh their infrastructure, deploy AI-driven technologies, etc. Now, companies, what they do is classic: they dismantle, resell, recycle servers, networking equipment, and other hardware with higher than usual resale values for such things as servers. In addition to our panel of senior executives, we are clearly hearing from publicly traded companies in the sector, obviously not just Iron Mountain, but many others. For example, OEMs that are confirming that the data center has been a star this year. We note that the data center business is not just renewing at the hyperscale level. Of course, this is the case, but tier 2 data centers are extremely active, from co-location data centers to edge, managed services, micro and modular data centers, etc. All of that is clearly stimulating a lot of demand for decommissioned and resale, and we believe that's likely to remain the case for many, many years to come and going forward. Secondly, specific to the corporate IT refresh cycles, enterprises, particularly those that bulk purchased devices during the pandemic era, say 2020, 2021, they're now cycling out these assets, increasing ITAD volumes. However, what we found out is that this trend appears to be inconsistent across sectors and verticals, as some industries are still delaying refreshes due to economic uncertainties. Think, for example, public sector. Thirdly, are a remote worker and hybrid models. The continued prevalence of remote work has maintained a steady demand for IT equipment decommissioning, including individual shipments of devices issued during the pandemic that are now obviously being processed by ITAD providers. So in general, these are part of the big picture on the demand side that has been stimulating ITAD activity this year. In terms of the component market per se and the secondary resale, the following is a general assessment as vendors have shown various performances and various level of activity. In general, the panel tends to note that prices for servers remain strong, driven by a high demand for AI-enabled infrastructure. Some companies reported average resale prices of between $800 and $900 for decommissioned servers, and that's significantly higher than traditional end-user computing devices. Prices for memory and networking gear have actually dipped, with several of the folks that we interviewed reporting weaker than expected resale value for these components. Finally, for commodities, that is the pure recycling side, commodity prices, example gold, have risen, helping companies offset the decline in other areas of resale. Again, here we're talking about savvy ITAD companies that seek to maximize their resale channels, and clearly these are companies that are finding demand for their products various channels. When it comes to revenues and profits in the secondary market, the resale of hardware, including, as I said, servers, laptops, desktops, and components, remains a core revenue driver. Prices for refurbished equipment have been doing well, particularly for data center assets, as I mentioned earlier. Though it's clear that certain components, like I noted, like memory and networking gear, saw prices declines. Overall, the resale market seems to have stabilized after the fluctuations that we witnessed and experienced back last year, that is in 2023. The second point that I'd like to make is on the direct-to-consumer sales. Companies that have shifted or expanded from wholesale to retail sales through platforms like eBay and Amazon have experienced increased margins and profitability. This shift has been crucial in sectors where wholesale demand has softened, and we saw that during the year. Finally, in the area of field services, we note that secure on-site data destruction and decommissioning services have actually been growing, especially in high security environments such as finance and healthcare, where clients prioritize data privacy. We've been told by most panel participants that an increasing number of their clients are now willing to pay for what I call premium services. And in fact, I was pleased to hear from a few participants that they would not take any client if there are no premium services involved. This is an area that we clearly expect to see more of in the years to come, though not all ITAD companies will be ready to market such services. Let me briefly address the labor market. Well, specific to hiring trends, while some companies have modestly increased headcount, and by modestly, we're talking about typically 5 to 10%, the focus this year remains what we've seen last year, and that's on productivity gains rather than large-scale hiring. For example, companies have invested in automated systems for device testing, for data wiping, for grading, and reducing the need for additional labor. There were also few companies that expanded their facilities. So, of course, they went through a hiring process, but they also made sure that everything was optimized. And the message specific to skilled labor demand is that despite the reliance on automation and productivity gains, such as managing shifts, etc., there remains clearly a persistent need for skilled labor to handle specialized tasks. These tasks include, for example, secure data destruction and processing of diverse range of OEM devices. Now, generally, companies reported that finding and retaining qualified employees remains a challenge this year, 2024, particularly in competitive labor markets. And what we found is some ITAD vendors have created a set of incentives to retain or attract good employees. And these incentives include guaranteeing an annual wage increase or sponsoring educational opportunities. Now, let me go back to one particular chart that I showed earlier on the M&A front based on the September 2023 survey. Now, as you can see, while some 67% expected business conditions would improve in 2024, the M&A outlook looked more uncertain as ITAD companies, as I said earlier, have adopted a sort of a wait-and-see stance. That's been reflected in this year's responses from the panel. In our year-end review, that is December 23, if you recall, me and my colleague Jared Pabin conducted a telebriefing on what we thought were the predictions for 2024, and we did assume that M&A activity would be stronger than what the industry reported based on this chart here. However, the industry participants were absolutely right. There were only a couple of acquisitions, no mergers at all, but we did see a few expansion initiatives with the likes of SK Tests and Sage expanding their presence with new facilities. So again, to reiterate, M&A activity in the ITAD sector has been relatively subdued, while some strategic acquisitions occurred, such as Iron Mountain's acquisition of WiseTech from Ireland. Most companies have focused once again on organic growth, expanding their services portfolio, for example, on-site data destruction, strengthening client relationships, rather than pursuing an aggressive expansion or an expansion through M&A. When you probe executives on this question, there's a lot of talk about high interest rates, economic uncertainty, etc., as deterrent for real acquisitions this year. First, I have to say that having some background in journalism, I am often drawn to reporting the negative. Journalists, as you know, are generally convinced that a good story is not something that could sell. They may be right somehow. However, in our case, that is, in this assessment, I have to admit that almost everyone I spoke with for this assessment, and people beyond that who would qualify as being responsible for about 70% of the market, 2025 feels actually awesome. Number one, this year they have done generally very well, certainly better than 2023, as I pointed out, on the revenue and on the profitability side. Secondly, they do say that they have the resources to tackle what's to come in 25 in terms of more demand for their services, including scaling and expanding if necessary, as they reported that they have the resources to grow. Third, they admit that while they see growing interest among their existing customers and potential customers through their refresh projects, etc., the industry recognizes the challenges ahead. For example, most companies say that they only have a few months in terms of visibility into demand. They cannot fully assess how demand will shape up for them over the next 12 months, for example. And so mid to long-term predictability or lack of it is clearly a problem when it comes to planning proper investment, hiring, etc. In the same context, the sales cycle in ITAD is pretty treacherous, with potential clients requiring 12 to 24 months of lobbying and negotiating. That, of course, requires a lot of investment to sustain, particularly make sure that your sales organization is on track to deliver. The good news, though, is that the industry has made substantial strides over the past years to prepare for a potential strong, sustained refresh cycle over multiple years. On the positive side, the industry has two certification platforms that create basic standards in terms of quality, in terms of accountability. We now tell our end user clients that without certification don't even bother. But while this is great, what we hear from many ITAD CEOs is that certifications are no longer a factor of competitive advantage for them anymore, since almost everybody has them. Another positive point, the industry has at least 3 major conferences that enable information sharing, networking, sharing ideas, etc. And that is absolutely great. So as we look at 2025, what do we see? Number one, technological shifts. AI has not been a big factor this year at all, but its adoption and the resulting demand for high-performance computing infrastructure and the next generation of computing systems will likely drive a new wave of refresh cycles, particularly in data center. As AI-enabled systems become more prevalent, we know that companies are expected to retire older equipment at an accelerated pace, for sure. Secondly, the ongoing rollout of Windows 11 will continue to spur device refreshes across all industries, providing obviously a significant boost for ITAD service providers. Companies are anticipated to replace their outdated equipment to ensure compatibility with new software, with new standards, with new technologies. That's been happening, that's ongoing, and it will continue certainly to take place over time. ESG and sustainability. Let me be very direct. No one is better prepared to deal with the regulatory pressure on the ESG front than good ITAD vendors. The sector has been talking about environmental stewardship for decades. Most of you folks who are listening, and you are in the ITAD space, you have built reporting systems that track how devices are moving from your clients to your system into the secondary market, and how they're disposed of, and what environmental gains your clients are making. And so you do have a great story there. The impact of ESG will begin to be felt, particularly in Europe, with regulations such as CSRD that will continue to push companies towards a more sustainable IT asset management practices. CSRD, the Corporate Sustainability Reporting Directive in the European Union, is expected to increase demand for ITAD providers' activity, and ITAD providers who can actually offer environmental friendly disposal and recycling solutions, but also for companies that can report data in a way that clients would want. Companies that prioritize ESG compliance will clearly have a competitive edge in securing contracts with multinational firms. And that's going to also reach the US. Let's talk about M&A potential. While M&A activity has been muted in 2024, the sector may see an uptick in consolidation in 2025 as economic conditions stabilize. We believe that larger firms will likely target companies with specialized capabilities in a number of things, including AI-driven technologies or sustainability, to expand their offerings. A big percent of the panels that we interviewed say they are either actively looking to purchase another ITAD company or at least expand their facilities to accommodate the expected increase in business. Now, what could be the negatives? Well, there's plenty of things that could derail growth in any industry. First of all, we are in the middle of an election cycle. And of course, the economic policy of 2025 and beyond will be determined by whomever takes office in the White House. So that's a big question mark. Global geopolitical issues are certainly could weigh down on and limit growth. If things don't go the right way. For instance, of course, China has a major role to play. Its leaders are making important decisions to stimulate economic growth. That's great. But again, among economists, there are many that are skeptical about the extent to which a Chinese stimulus package could actually be helpful. Nevertheless, it's something that we're going to be watching for sure. So a lot of things could derail the positive, but net, I think net, we have a lot more positive drivers and a lot less negative inhibitors in the way we're seeing 2025 unfold. So what is the issue that the industry is facing? Well, while the industry has 3 major conferences and 2 certifications as an industry, there's been very little outreach to enterprises and end user buyers in general. Most outreach efforts specific to end user clients focus on individual ITAD firms using such platforms as LinkedIn to promote their services, for example, with very little to no return on their marketing investment. At Compliance Standards, we propose to take you to decision makers directly to expand your brand recognition, to help boost your marketing initiatives, to obtain qualified leads, to empower your sales organization, and to be seen by the market as a thought leader. I'd like to use this opportunity to announce that we have partnered with leading media platforms to allow you to accomplish at least 3 things. Number 1, expose your brand and know-how to tens of thousands of corporate decision makers that are involved in ITAD, in ITAM, in data security, in procurement, and other areas of interest to your business. This would give your marketing team a shot in the arm by getting your message in front of decision makers around the world. Number 2, we do the research for you by identifying companies, their individual buyers, and we look to learn more about their ongoing projects and report back to you in terms of leads. Number 3, we can also qualify the leads to understand ongoing purchase intention and get you super close to the buyer. How do we do that? Firstly, Compliance Standards works with you on creating the relevant content required to reach prospects and keep them interested. Content types include webinars, podcasts, white papers, infographics, etc. We use our data, proprietary data, to enhance that content. Number 2, our media partners will publish our content in their best publications that reach hundreds of thousands of professionals and decision makers and deliver that content to qualified and vetted audiences, not just in the US, North America, or specific regions, but worldwide. Our media partners will do all the research work on your behalf to identify the real prospects and hand them over to you and to your sales organizations for follow-up. Now, if you're interested, of course, my contact information is displayed in this presentation. Feel free to contact me at your convenience. And until our next talk, I hope this presentation was useful. Thank you and goodbye.